What's the best passive income business to start? Really, what's the best passive income business to do, period? So if you're online trying to make money, or if you're a business owner who's in this market of trying to make additional income and really don't want to keep starting over constantly making money, right? So in the business that you're doing, you really don't want to constantly sell new things every month or go out and sell new houses if you're a real estate agent, or if you're some high ticket kind of business, find a client every month to make that additional money. What is really the best passive income business to do that you could really start out the gate making some serious money, but also it could escalate in the future and you own this for a lifetime? So with me being in real estate, I really had to evaluate and rethink this thing. Like, is real estate really the best passive income business I could do? Is there anything else in the market that would allow me to have a passive income asset that could escalate in income and I don't have to do anything? Because honestly, when I think of passive income, I think of not doing anything. So I'm a real estate investor and I do stuff in real estate. So you know what? I'm looking at this going, this is not as passive as it could be. So here's why this subject came up. And if you are a business owner, you're into real estate, or you work in any capacity that you are working for money in a sense, and you're trying to build something solid, so at some point you could quit, the income continues without you, and it can last a lifetime. That's what I'm going to dive into this video and just show you my ideas on this, my thoughts on it, and what I found out. So here's why that came up. Being a real estate investor, this came across, and we always getting deals as real estate investors. You have people call us up, hey, you want to sell your house, or you get shot a deal. So here's a deal that I saw, and it came up, and it was like, oh, okay, I went to check it out. So this property is selling for $72,000, a 3-bedroom, 2-bath. Now, with a property like this in my area, you could get about $1,200 for rent. So 1,200 to 1,500 a month. 1,500 is definitely on the high side. 1,200 is kind of an easy break into this. So let's go just look at the property so I can give you a feel of what it looks like. So this is the outside. These are some inside pictures. I mean, not bad, right? It looks doable. Now keep in mind, sometimes these are old pictures that you see. So when you actually go out to the house, it doesn't look like this. It might need some rehab. So if they show me a picture like that, chances are it needs some rehab, right? Which is not bad. All this means is you might put some money into it, or some sweat equity, they call it, literally put your time into rehabilitating this to get it up to rental standards, and you could get someone in. So that's what the property looked like. So it's like not a bad deal in a sense, but you know what? Let's look at the numbers and on paper and see where this goes. Because we're talking about passive income here. We're talking about, investing in something that's going to bring you income into the future that you own. So let's look at the numbers. So this is for business owners, right? People who have a business, people who are business minded, people who are looking to having a source of income. They invest in something that gives them a source of income. So this is not for people. They're trying to say, oh, I want to do something for free, and I'm going to try and find some free opportunity and see if I can grow it. Because chances are, guys, that's why you see a lot of us business owners, we've done a lot of stuff and realized these gimmicky free stuff that says, oh, put $1 in, $2, it's going to spin and cycle and rotate. It's like, it doesn't work. So when you get to this level, you realize, okay, I'm going to have to look into something serious. So that's what I'm showing you here. As a business owner, if it wasn't real estate, you're looking at real estate saying, a lot of people are making money in real estate, and you want to see the numbers. This is what the numbers look like. So on a property that costs $72,000, there's only 2 ways to float this. Well, there could be 3 ways, right? You could get the property, someone donate the property to you, which is very rare, right? Very rare that an average person could go out there and talk to a seller and have them, in a sense, give the house to them for free. It's a very rare thing. You have to have a little skill with that. So if you don't have any skill, here's what you're going to have to do. You either have to pay cash for it outright, or you're going to have to finance it. That's your only options. So if you're paying cash, it's $72,000. So of course, you could bargain for, paying less than that. But let's say a property, whatever property you got, even if it was 100,000, you talk them down to 72,000. You pay $72,000 for a house, or you could finance it. If you're going to finance it, because you're not going to live in it, the bank is going to require that you put at least 20% down. So 20% down on $72,000 is $14,000. and then you'd get the rest of the loan for 57,000. So that's the breakdown of how you could acquire this house. So when you acquire this house, it's gonna say generate you $1,200 a month, right? So it could be 1,200, 1,500, but 1,200 is a sweet spot. So 1,200 times 12, that's about $14,000 that you can make on this investment that you just spent $72,000 on. However you want to split it. So with all that, this house is gonna have some maintenance to it. There's some stuff you're gonna have to make sure you take care of. The water bill, the taxes, the insurance, and if you're not gonna manage it yourself, you're gonna have to employ a management company. You're gonna probably do some repairs. Things break all the time. There's different things, that comes up that you probably have to put into it. Like you saw the possibility that it might need flooring, it might need, some painting. So you might be putting in some money into it additionally to bring it up to par to rent it. So totally, when all this is said and done, right, the total expense could be about $8,000 a year. And this is what your income would be after everything's done. So if you're paying it for cash, about $8,000 in expenses, so you take home about $6,000. So $6,000 that way, if you're paying for cash, if you're going to finance it, right, you pay about the same expenses, but you're going to add in how much you're going to pay the mortgage company. So that's an additional $4,000 a year. You add those two up, it's about $10,000. So on this side, if you finance it, you could generate about $1,500 for the entire year. So how does that break down? What does that actually break down to? So this is what it breaks down to. You spend $72,000, you make $6,000 a year if you pay cash for it, that is, and then $511 a month. Or if you finance it, you still pay the $72,000. Well, you actually paid $14,000 because that's your part of it, your down payment. You finance the rest, and you make $1,500 for the year or $128 for the month. So as you see it, to make a whole lot of money in real estate, you need more than one house, right? So if you're going to go it this way, you're going to pay everything in cash. Then you realize, okay, if they make $5,000, right? That is 10 times the amount. Then that means maybe you got to get 10 homes, right? So 10 homes at this price, that's over $700,000, close to $1 million you're paying in real estate to buy houses outright in cash. Not many people have $1 million to just put in real estate just to buy some houses so they can make $5,000 a month. They have better investments to involve in. So if you're not going to do it that way, this is a traditional way us real estate people do it. We put a down payment on a house and we finance it. So if you're financing things, this is the income. As you can see, that is not a lot of money. $1,500 a year after you put $14,000 down payment on it, that doesn't come out to a lot. But you know what? You're still making money. The risk is a little lower, and you own the asset, right? So real estate is looking pretty good compared to being online. If you spend, right, there's people online who have lost $14,000, $20,000, $50,000 in some scammy investment deal, right? They didn't even get the opportunity to capitalize on $1,500 or even $128 a month. So however we split it, real estate, yes, you can make passive residual income, they say it, but it's not as passive as you think. Because when I think of passive, here's what I think of. If you're looking at the cash flow quadrant, Robert Kiyosaki, right? If you're over on this side, you're trading your time for money. If you're over on this side, you literally have something else making you money, right? But here's the problem with all of this. If you're an employee, of course you have the job. You're not making any money. You don't have any time, right? This is being sucked in bills, all the things you have to do. You're losing time. This is a loss proposition. So this is where, you know what? You go get some skills at a job, you make some money, you could save some up, and then you could go, right? Gradually get through these phases. So the next phase is, okay, you're on the job, you have a little investment capital. So then what you do, you kind of get yourself in a business like people online. You get yourself in a network marketing business. You're trying to drop ship. You're trying to do all kinds of stuff that involves you doing something to then earn money online. So in a sense, you become self-employed. Back in the day, that's what I was doing online. I mean, I'm doing a lot of things, making money, losing money. In a sense, I was still in this boat. I was still trading my time, staying up late at night, making websites, making funnels, doing all this. Same position I was in. I didn't get out of this phase. So this phase is really active. You're doing something. You're physically doing something. And this is where I wanted to get out of. You get tired after a while, right? Tired of recruiting, tired of chasing people, talking to friends and family. That is just not something I wanted to do anymore. So it's like, well, how can you get out of this? So real estate is where I'm at. Still self-employed, right? So it's like, well, how do you get over here? Now, in real estate, to get out and make passive residual income, you truly have to be in this phase where you become a business owner, where you own a system. And the system would be, you know what? You're hiring a management company to take care of all your rentals. You're hiring contractors to take care of all your maintenance. So you're not even going there to do any maintenance. You're hiring people to do it. You're hiring lawyers, eviction people. You're hiring a team of people that, in a sense, you oversee and they run your business, right? So you could imagine you're going to be managing people to do that. So if someone doesn't do anything, you're going to have to call them up and all that stuff. So that's what the business side of real estate looks like. And besides, it involves you putting a lot of money into it, right? Like I mentioned here, if you're paying $72,000 in cash to buy one house, even though you make $6,000, right? You're going to have to put a lot more houses in place. That means you're going to spend 10 times this amount. Or if you're financing them, even though you paid 20,000 down, 14,000, that's still 14,000 times 10 houses, right? Times 100 houses. It becomes a lot of money. So the goal is really to get over to this side, that you have something working for you, that you don't have to keep doing this over and over. So that's where, over on this side, right, it becomes passive income. So how do you get over this side and actually make it worth your while, that you could actually even afford to be over here? Because a lot of people do not have the money of those big, real estate investors or big business owners to be over on that side. You have a little bit of money to invest, but definitely, certainly not 14,000, certainly not 10,000, right? Way less than that. We're talking about in the range of 2 to 500. Some people 1,000, maybe 2,000, right? That's your max. And you're going, that's all I can invest in anything. But yet you want to make the big income. So, how can you actually do that? So that's where I looked at, what are some ways, someone could make a lot of passive income with a low investment. It scales over time, like in real estate, and you own something that, you can make passive residual income. So here's what I came up with. So you could definitely go to the site right here. I created a site where I put all the information on the site. So you could definitely read the site here. There's 5 things that I came up with after I did some research. And I'm just going to go to the summation page so we could see it. So the 5 things they mentioned was high yield savings. So you can make up, passive income with high yield savings. The problem with these things I was seeing, some of these, so we'll just go through them. High yield savings, you know what that means. You put in a saving account that's higher than your bank. You make, 4 to 5%. Some things online like Sophie Bank, I think, or there's Ali Bank. There's a lot of online place that pays you a lot more interest than your bank does. So that's a possibility. The other one is dividend stock. So if you bought a stock like, I don't know, I think Microsoft might have one, different stocks that pays you dividends. Then they give you a dividend rate. You could decide on how big a dividend you want, what kind of risk you want with some of these stocks, and pick them. And that's a way to generate passive residual income. So you can see most of these, right, the high yield investment or the dividend, and this is not financial advice, guys. I'm not your financial advisor. This is just stuff I look up. I was thinking about it. So this is my ideas about money and, things that I'm interested in. And that's why I, kind of showcase it, because I'm just having a conversation around it. So if you want to do something like this, because I looked into this, it's like, but yeah, I could make more money by taking my money out of the bank, putting it maybe on an online bank account, and they give you more interest. That's absolutely true. The risk of that is pretty low, because here's a bank that's FDIC insured, so it's like I felt good about that. The return was fine, but there's always something inherent about things, right? So the dividend stock, the same kind of concept. You buy a stock, they pay you dividends every year. There's many stocks you could research and see what the dividends they're paying, and then you could pick one. Okay, so those are definitely passive, no work involved, right? Once you put your money in, they're paying your dividends. Of course, everything comes with risk, right? If the bank is doesn't can't afford to pay you the high interest, they're going to lower it. If the stock, you know what, is not performing well, they could lower it. So there's always some risk in something. Now, there's something called a REIT. A REIT is like investing in real estate without you physically buying the house. You just buy a share of it. So that's another option. That operates like a stock kind of a thing. Now, you can see they make different returns, right? Which is pretty decent. In real estate, you're making that kind of returns a little bit higher, but you're putting a lot more money into it, right? In real estate. Now, the other one came up was affiliate and digital asset. Now, this one kind of surprised me, but it was like, you know what? Yeah, affiliate marketing, that kind of stuff, it still puts you in the realm of network marketing, recruiting, building a team, earning overrides. So this is still that range. And it's like, you know what? That was interesting that they put it as a passive income source. And I'm like, yeah, that's pretty cool. And you can see the returns they're saying. You can make some serious returns on your money. Because, you could join a network marketing company for, say, like $50 a month, $100 a month, and you make substantially more, right? Thousands a year. So that's a big increase. Of course, there's some risk involved, like anything. There's some upfront costs, like anything. I mean, good returns. The risk, of course, the company could, go out of business, but you pick a good network marketing company and they're in business, right? Look at Avon, Melaleuca, places like those. There's definitely things here that are here to stay in the network marketing world, the online space. So the opportunity is real and it's a good return on it. The other one that came up was crypto staking. Now, a lot of people don't know about staking. If you're in the crypto world, you might hear about this staking, mining, that kind of stuff. And people have made a lot of money in these kind of things. But you kind of have to have good knowledge about this kind of stuff, know how to do it, know how to navigate the entire world of the staking. And of course, the risk can be high, depending on maybe some Yahoo company who just slapped something together and you don't know they're legitimate and then you invest in them. So definitely high, risk there, but you can make some monies there as well. And it could also be a passive source. Now, this thing, peer-to-peer lending, that's something that totally got me like, wow, peer-to-peer lending. Now, back in the day, I did get involved in a peer-to-peer lending platform, and it was supposed to be a passive thing. The problem with this, there is some risk. Lending your money on these platforms, you can't, know or guarantee how this platform is going to make sure this person pay you back your money. So there's definitely some risk in that as well. It's not insured in any fashion. And of course, real estate, you can see the risk they assess it anywhere from medium to high. Depend on, have a property, you could lose it, all that stuff, foreclosures, all that stuff. So it could come with a high risk. If it's not going well, it's not rented, you're not making any money. And of course, the startup cost, that's what killed me, was looking at it going, it is high. And that is true, it is high. So looking at this, I'm going, you know what? I'm not liking, you know, most of these odds of what these things are. I want something more solid with better, options and pay me more. So I kind of, took the same list and I kind of circled what would be ideal for me. I mean, I'd want the passive level to be truly passive, no work. Literally, I don't want to pick up a pencil. I don't want to write anyone. I don't want to call anyone. Literally, no work to it. And of course, who doesn't want a return to be super high, right? With a low risk kind of a thing. And my involvement is none. And I definitely want the startup cost to be low. So when I look at all this and, check out what I'm doing in real estate, it's like, you know what? I'm not in the most ideal. I mean, what's really ideal is something that gives me high returns for low work, but of course the risk is pretty low. Because I mean, if you're gonna gamble your money, right, put say $1,000 in something and then lose it, it's like, well, I'm not gaining anything. So these crypto deals that you spend money on, trying to double your money, triple your money, and then lose it, it's like, you know what? Tired of those games, right? Just tired of those. You want something solid that could perform. It's built on something solid. It generates passive residual income. But guys, that's what I was excited about when actually someone shared something with me and it totally blew my socks off. Coming from a real estate investor business model, coming from a business model on the offline space, it was definitely fascinating to see that in this day and age, there is a legitimate business out there that check the boxes of being high returns, totally passive, a low kind of risk tolerance to it. My involvement is none. And of course, my startup cost was way, way lower than it could have been in real estate. So guys, if you are, you know what, a business minded person, right? You've been online for a while, you're tired of, spinning your wheels, you're burnt out, you're not trying to go recruit the entire world, and you certainly is not trying to go talk to your friends and family to join some a gifting, a susu, a doubler, a cycler. Let me triple your money here and double your money here. You really want something solid that any business person could look at it and say, you know what? That's a business asset that makes sense. Then this is something you want to take a look at. I'm going to leave this page up so you could actually go check this article out, read it all, and pick your favorite. Whatever resonates with you, definitely you could do some more research. This gives you some more details in it, gives you the pros and cons of each passive income source that's mentioned, and you get to decide. But whatever you do, definitely check out my number one recommended income source here. You're going to get to a page that allows you to then go to another page that you will see the entire information about this passive income business. So if you're seriously looking for a business that could give you passive true, because everything they're saying real estate is passive. If you're looking for a business to give you true passive residual income, like you and I are thinking about it, the idea that there's no work, there is nothing you need to do, you need to see anyone, talk to anyone, recruit anyone into, then this is the number one recommendation I have when you're looking for passive income.